Okay, so you know that feeling when you realize the end of the year is coming and it's time to start thinking about, well, yeah, all the financial stuff.
Oh, yeah.
It's like a pit in your stomach or something,
And
right?
it can be kind of daunting, right? Like a mad dash to the finish line.
Exactly. But what if instead of just surviving it, we could use this time to not just close the books, but really set ourselves up for a killer next year?
I like the way you think.
This is what we're digging into today. It's like a cheat sheet to make those year-end finances less of a headache and more of a launch pad.
And the best part is, you're right, it shouldn't just be about crunching numbers.
Right.
It's about being strategic, using this time to really get a handle on where you are financially so you can make better decisions moving forward.
Like a financial pit stop? I love it.
Exactly.
So first things first, we got to close out the current year properly.
Of course, gotta tie up those loose ends.
The guide we're looking at today really dives into this whole closing process. And one thing that jumped out at me was the emphasis on reconciling every single transaction.
Oh, absolutely.
We're not just talking about glancing at bank statements here, but really making sure that every dollar, every cent, every transaction is accounted for.
You know, it's so easy to let things slip through the cracks during the year. Maybe your receipt got lost, or, maybe you just forgot to log that one tiny expense.
That happens to the best of us.
Exactly. But even those small discrepancies can add up and create headaches later on.
Yeah, that makes sense.
This process of reconciling everything, it's like putting together a big financial puzzle.
Okay, I like that.
Each piece, each transaction, it needs to fit perfectly to get that clear picture.
A financial jigsaw puzzle? I can get behind that.
Right.
But, this is probably where that year-end crunch feeling really hits home for people.
It's true.
I'm picturing mountains of paperwork, those shoeboxes full of receipts.
It can definitely feel overwhelming.
Yeah.
That's why having a clear closing schedule is so important.
Oh, absolutely.
And not just for the finance team, for everyone in the company.
Oh, interesting.
When everyone knows what they need to submit and when, it just streamlines the whole process.
Makes it less of a scramble at the last minute, right?
Exactly. For example, let's say you work in marketing. You might be thinking, what does reconciling transactions have to do with me?
Right. I'm sure some people tune this part out.
But hold on, you've got expenses too, right?
True.
Software subscriptions, maybe event costs.
Makes sense.
Making sure all of that is accounted for on time.
Yeah.
That's what keeps the finance team sane.
So even if you aren't in finance, understanding this stuff helps you work with finance better.
Exactly. You start to speak their language.
I like that.
And since we're on the topic of understanding the language, let's talk about accruing receivables and payables.
Okay, I was kind of hoping we could skip over that one, but yeah, break that down for me.
All right, so essentially, it's about recognizing revenue and expenses when they're earned or incurred, not just when the money actually changes hands.
Okay, that sounds kind of complicated.
It's not as bad as it sounds.
All right, well, give me an example then.
All right, let's say you completed a project in December, but you're not going to get paid for it until January, right? You'd accrue that revenue in December, even though you haven't actually received the payment yet.
So it's like you're acknowledging that you've earned that money, even if it's not in your account yet.
Precisely. It gives you a much more accurate picture of your financial position.
Okay, that actually makes a lot more sense now.
It's about matching those expenses to the correct period, even if the cash flow happens later.
Got it. So we're essentially making sure everything is accounted for in the right time frame.
Exactly.
Okay, I'm starting to feel a little bit more financially savvy already.
I love it.
We've tackled closing the books, and we're starting to speak finance. What's next on our journey to, what did you call it, financial brilliance?
That's right, financial brilliance. Well, once we've tied up those loose ends from 2024, it's time to zoom out and look at the bigger picture.
I love it.
Time for a financial checkup.
It's like going to the doctor. But instead of checking our blood pressure, we're checking the health of our business.
Exactly. And one of the most powerful tools for this checkup is the balance sheet.
The balance sheet, everyone's favorite.
It sounds intimidating, I know.
It does. It really does.
But I promise you, it's not as scary as it sounds. A balance sheet, it's like a snapshot.
Yeah, okay.
It captures the financial health of your company at a specific moment in time.
So if the balance sheet is our financial snapshot, what are some of the things we should be looking for in that picture?
Good question.
I mean, you mentioned it shows us if there are any, red flags, right?
Absolutely. It can reveal potential warning signs.
Like what? Give me an example.
Okay. Let's say your balance sheet shows that you have way more liabilities than assets.
Liabilities versus assets. Okay.
Right.
And just to be clear, for anyone who's like, wait, what are those again?
Sure. So liabilities, those are things like loans, debts, money you owe to others. Assets, those are things you own that have value, cash on hand, inventory, what others owe to you.
Okay, so if you owe a lot more than you own, that's a red flag. Got it.
It suggests that your business might be relying too heavily on borrowing, which can make you vulnerable, especially if there's a sudden economic downturn.
So the balance sheet is like our financial early warning system.
That's a great way to put it.
I'm liking these analogies.
It helps us spot potential issues before they become bigger problems.
Now, I noticed this checklist mentions checking for outstanding payments again in this section. Why is that so important? And are we just really bad at keeping track of these things?
It's easy for them to slip through the cracks, especially when you're busy.
You sure?
But even small outstanding payments can impact your cash flow.
Yeah, it all adds up.
And sometimes those outstanding payments, they can point to bigger issues.
Really? Like what?
For example, if you're constantly having to chase down late payments, it might mean you need to look at your invoicing process.
Oh, interesting. Okay.
Or maybe it's time to have a conversation with certain clients.
Yeah, to kind of figure out what's going on.
Right. It's about understanding the why behind those outstanding payments.
So we're not just balancing the books here. We're playing financial detective.
I love it. You're catching on quickly.
Gotta love a good mystery, right?
Yeah.
But in all seriousness, you're right. It's about using this information to make better decisions and improve our financial habits.
Exactly. And while we're on the topic of uncovering those hidden opportunities,
Ooh, hidden opportunities. I like the sound of that.
this checklist also reminds us about something that tends to make everyone a little bit nervous: taxes.
Yeah, can't escape those, can we?
Unfortunately not.
But, I appreciate how this guide frames it. It's not just about minimizing what we owe. It's about maximizing what we can deduct.
Exactly. It's about being smart and strategic.
Right, like a little financial treasure hunt.
I love that analogy because you're right. Understanding those deductions, it can make a real difference.
Absolutely.
But it's not always as simple as it seems.
Oh, I know. I've definitely been lost in the weeds of tax forms before.
It can get complicated.
So what are some common mistakes people make when it comes to these deductions? What should we watch out for?
Well, one of the biggest pitfalls is assuming that any expense related to your business is automatically deductible.
Oh, so you can't just write off that trip to Hawaii because you had a business call while you were there.
Not quite, no.
Darn.
There are rules, and they can be quite specific.
Okay, so give me an example then. What's something that often trips people up?
Sure, a classic one is using your personal car for both business and personal use.
Oh yeah, that's super common.
You can't deduct all your car expenses, only the portion that's directly related to business.
Which is where that whole mileage tracking thing comes in handy, right?
Precisely.
So suddenly, I'm feeling very motivated to organize that shoebox full of receipts.
You and me both.
But seriously, keeping those detailed records throughout the year, it makes a world of difference.
Absolutely. Not only does it help you support those deductions, just in case you ever get audited,
Always a good idea to be prepared.
but it also gives you a much clearer understanding of your actual business expenses.
Okay, that makes sense.
Knowledge is power when it comes to your finances.
So at this point, should we all be running to hire a tax professional?
Well, it's always a good idea to consult with a pro, especially if your finances are a bit more complex.
Yeah, that makes sense. Sometimes it's worth it to have an expert in your corner.
They can help you navigate all those intricacies, make sure you're claiming everything you're entitled to, and most importantly, they help you stay on the right side of the law.
Okay, so we're being strategic, getting professional advice where needed.
Exactly.
Now, this checklist threw in a curveball I wasn't expecting.
Oh, what's that?
It suggests that sometimes spending money at the end of the year, strategically, of course, can actually be a good thing.
Ah, yes. The strategic year-end spending spree.
Yeah, it sounds a little counterintuitive, doesn't it? Most people are trying to save every penny this time of year.
It does go against the grain, doesn't it?
Yeah.
But think of it this way. Let's say you've had a good year.
Okay, I like the sound of this already.
You have a little bit of leftover budget, and you know you're going to need to invest in some new equipment early next year.
Okay, yeah.
Now, if you make that purchase this year, you might be able to deduct a portion of that expense on your current year's taxes.
Oh, so it's like you're getting a head start on next year's expenses and potentially lowering your tax bill at the same time.
Exactly. It's about timing those expenses strategically.
Like a financial chess game.
Precisely. You're planning your moves in advance to maximize your position.
Okay, I can get behind that.
Of course, you always want to weigh the pros and cons carefully.
Right, don't go spending money just for the sake of it.
Exactly. But if you have those planned expenses and you've got some wiggle room in the budget, accelerating those purchases can be a savvy move.
That is a seriously useful tip, and honestly, I bet most people have no idea.
It's a hidden gem.
All right, so we're talking deductions, we're talking strategic spending. What else is in this year-end financial playbook?
Well, now that we're feeling a bit more strategic, it's time to tackle a topic that can really help streamline this whole process: automation.
Okay, automation, always a hot topic.
It's a game changer, especially when it comes to those year-end financial tasks.
Because let's be honest, no one actually enjoys spending hours on end reconciling spreadsheets.
No one, and that's the beauty of automation. It's not about replacing jobs.
Right.
It's about freeing up your team's time.
So they can focus on more strategic work.
Exactly. The things that actually move the needle.
So give me an example. What kind of tasks are we talking about automating here?
Oh, think about all those tedious manual tasks: data entry, invoice processing, reconciling bank statements.
All the stuff that makes you want to pull your hair out.
Exactly. Those are all things that can be automated with the right software.
So instead of chasing receipts, our finance teams can focus on analyzing trends, making strategic decisions, the fun stuff.
Exactly. It's about working smarter, not harder.
I like the sound of that. Now, this checklist also mentions something that I think is really important, even when it comes to finance.
And what's that?
Getting feedback from your team.
Yes, feedback. The key to continuous improvement.
Because even if you think you found the perfect system, there's always room for improvement.
Always. And sometimes the best ideas come from the people who are using those systems every day.
Exactly. So how does feedback play into this whole automation thing?
It's about making sure those automated systems are actually working for you, not against you.
Okay, I like that.
Let's say you've implemented this new accounting software to automate some processes.
Okay.
You might think it's the greatest thing since sliced bread.
Right.
But your team might have some valuable insights.
They might see things you don't.
Exactly. They might know ways to make it even more efficient.
Right. They're in the trenches, so to speak.
Exactly. They might see things that you miss.
So instead of just saying, hey, we automated this thing, deal with it,
Right.
we're creating this feedback loop to make sure it's actually working for everyone.
It's all about continuous improvement.
I love it. But, sometimes getting that honest feedback, especially when it comes to potential problems, can be tough.
It's true. Nobody wants to be the bearer of bad news, right?
Exactly. So how do we encourage people to speak up, to share those insights,
Yeah.
even if they're not always positive?
It takes effort, not going to lie.
Yeah.
You have to build a culture of trust
Okay.
where people feel comfortable speaking their minds.
So it's not just about asking for feedback. It's about creating an environment where people feel safe giving it.
Exactly.
Are there any specific strategies that you found helpful in that regard?
One thing I've seen work really well is framing the questions in a way that focuses on the process, not the person.
Okay, I like that.
So instead of saying, hey, what's wrong with this software? You could say something like, what are some ways we could make this software work even better for us?
It's subtle, but it makes a big difference.
It does.
Because no one wants to feel like they're being blamed for something.
Exactly.
They want to be part of the solution.
That's the key.
All right, so we're talking about closing out the year. We're talking about automation, feedback, all this great stuff.
Important stuff.
But this checklist doesn't stop there.
It doesn't, does it?
It also encourages us to look ahead, to set our sights on next year, and specifically to set financial goals.
Gotta have those goals.
Right. But, this is something that I think a lot of us, even in our personal lives, we kind of shy away from.
It can feel intimidating.
It does.
Yeah.
Because it means getting specific. And sometimes those numbers can be scary.
Right. It makes it real.
Exactly.
But think about it this way. Think about your own personal finances for a second.
Right?
When you set a clear financial goal,
Yeah.
like saving for a down payment on a house, or maybe a dream vacation.
Ooh, a vacation. I like where this is going.
Doesn't it change the way you manage your money?
It totally does.
Suddenly that impulse purchase doesn't seem so tempting anymore.
Exactly. Because you've got your eye on the prize.
That's the power of goals. And the same principle applies to your business.
Okay, so how do we translate that personal finance mindset to the world of business goals?
It starts with aligning your financial goals with your overall business objectives.
So big picture stuff first.
Exactly. What are you trying to achieve as a business? Are you looking to grow?
Okay.
Expand into new markets, maybe launch some new products, hire more people?
Right. All of that requires, resources.
Exactly. And those resources usually translate to, you guessed it, money.
So those big picture goals need to be grounded in financial reality.
100%.
And I imagine that's where things can get tricky because sometimes we get so caught up in those big dreams that we forget about the practicalities.
It's easy to get ahead of ourselves. That's
Yeah.
why it's so important to be realistic about what you can actually afford to achieve.
And to have those honest conversations about resources.
Exactly. Do we have the right tools, the right technology, the right people?
Because sometimes you need to invest in those things up front in order to reach those bigger goals.
Absolutely. Sometimes you have to spend money to make money.
Music to an entrepreneur's ears, right? So we've got our goals. We're being realistic about resources. What's next?
Well, remember that feedback loop we talked about?
I do. It's coming back around.
It's not just about improving processes.
Right.
It's about making sure your team has what they need to succeed.
Oh, I like that.
So this checklist, it encourages you to not only ask your team about what finance can do better, but also what resources they might need to excel in their roles.
So we're flipping the script a bit here.
We are.
Instead of finance just dictating things from on high,
Right.
it's about empowering everyone to contribute to the financial well-being of the company.
Exactly. When everyone feels like they have a stake in the financial success of the business,
Yeah.
it creates this sense of ownership of shared responsibility.
And ultimately, that benefits everyone.
That's the goal.
This has been eye-opening. I feel like we've gone from feeling that end-of-year financial dread to having a clear path forward, not just for surviving, but for thriving.
I love that. And, that's the beauty of this checklist. It's not about following some rigid set of rules. It's about using these strategies as a springboard for having more informed and strategic conversations about your finances.
So we're not just closing out the year, we're setting ourselves up for success in the next one.
Exactly.
I am fired up and ready to tackle those year-end financials. How about you?
Bring it on.
That's what I like to hear. So to wrap things up, what's the one key takeaway you hope listeners walk away with today?
Year-end financial planning. It's not just about crunching numbers. It's about asking the right questions, analyzing the data, gathering that feedback, and using all of that information to make smarter decisions that set your business up for success.
It's about being proactive, strategic, and informed.
Precisely.
So as you're going through your own year-end financial checklist, remember, it's not just about the numbers. It's about the story those numbers tell and what you choose to do with that story.
Couldn't have said it better myself.
Use this time wisely. Ask those tough questions, and you'll be well on your way to a successful and financially sound new year.
Here's to a prosperous new year.
Cheers to that.